Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in, take a look, see what's going on today. If you want to follow me, it's at @finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, sectors, looking for investment opportunities, sharing those opportunities with everyone in the community. I do that through midweek updates and also through question and answer sessions. I am using technical analysis, market cycles, and ratios to determine my purchase points. I am trying to buy as early as possible in the turning points given the patterns. I'm using patience for the patterns to play out, and it has worked quite well using this approach. So if you want to learn that approach, definitely sign up. Specials the coupon code. You get 50% off the first month only on a monthly membership, and a $100 discount on a yearly membership. And you can always swap from a monthly to a yearly if that's what you'd like to do. So I'm starting off with myself. Canadian crude is squeezing into a falling wedge. And I said, "You ready?" What does that mean? Are you ready for this? Are you in the companies? Now, the companies are already going up. They are front running this move. Now, everyone and their mom is bearish crude oil, it seems like. Recession this, recession that. Um, and we very well could have a little bit of a false breakdown before a slingshot move higher. A lot of the times, these falling wedges have these kind of washed out moves right at the tip here. Not all the time, but some of the time they do. And people get scared. That's what you need to overcome. You need to overcome and say, hey, this is a falling wedge. Even if we get a little bit of a falling move, like a washout sale, you got to buy that. Not sell that, buy it before it goes higher. We had one of those in 2020. We had a nice big one where they shut down the economy. I can't tell you if that's what we're going to get here. I don't know if there's going to be some sort of event that they conjure up here. Very possible. Maybe they do that to try to lower interest rates. Not too sure. But it is coming to a resolution soon as we enter this tip. Right, wrong, or indifferent, up or down, it's going to get resolved. And I think the longer term, it's up because of the pattern that precedes the move. Double bottom, breakout, retest. I just don't know what happens in this little corner here. Still a mystery. Coming down, roadmap for uranium. Now, uranium, this is Kazatomprom. That's the largest producer of uranium. That's why I'm using it. I don't have any money in it. It's all over, stuck in different areas of the uranium space. But we can use this as a roadmap. The ultimate bottom was 2020. That was the best entry point possible. We had a wave one move. We have a wave two consolidation. It's an ABC consolidation sideways. It's kind of flat there. So we consolidated it for wave two, and now we're entering wave three, which is this big old wave. This is a fractal from another company that I grabbed of an entire move. And it's looking pretty good. So we're going to have to put in potentially a wave. This could be wave one and another wave two in this area over here in wave three. I'm talking Elliott wave count. So this could be one, two, and then we'll get another one, two, and then we'll get another big surge higher. And this is just an example. Don't take it verbatim. Don't take it perfectly. I'm just giving you a rough roadmap. It could go up way more than this. So don't get too don't get your pants out of all bundled up here if this isn't exactly what it looks like. This is oil. Dow Gold equals 1. Oil headed to 350. If this halfway flag plays out, Given the duration of this bullish consolidation, I have little doubt. Yeah, this is a consolidation here, one hump, two hump, and then the third. You get a false breakout, a big move higher, and then you get a consolidation on top of a consolidation pattern. So this is a consolidation on top of a consolidation. We have the exact same situation occurred in the year 2000, 2001. And you know what happened in 2001? We had a recession. And you know what they did? They lowered interest rates. What do you think we did right here? 2022, we had a slowdown, and then they're going to lower interest rates. It's like a carbon copy of the setup that we had back here in the early 2000s that were over here. That's not on this chart. Same setup, in my opinion. It's very, very similar. Now, things rhyme. They're not exactly the same. But we can learn from the things that rhyme, and we can see similar patterns and fractals that have developed. The companies are already starting to run. Uh, the big boys, like the Chevrons, the Conocos, and I've showed that on here before. And then they're the companies that I'm interested in. What are the companies that I'm interested in? The ones that can do 10 bagger pluses, the ones that can grow production into a $350 oil price, the ones that are buying back 10% of their share count or 10% of the company every single year right now. Can you imagine what they're going to look like at $300 oil if it were to stay up there, or 200, or 150, or even $100? If they're buying 10% of their company back every single year at 70 or 60 something 70, imagine what it will be at 100 plus. They are going to print money. I mean, print money. Good thing I have a good exposure to it. But this looks fantastic. Stocks are dangerously overvalued. So when they say stocks, some people always ask me, well, is it the stocks that we own? No, it's not. This is S&P 500, NASDAQ, that type of crap. Stock market valuations based on the S&P companies' book values and dividends. 2024, this is the most expensive, basically, it's ever been. And the normal range is down here. It's down here. 1932, 1932, 31, 42. There's a whole bunch in here. Then we get up here. This is 2000. And 2024 is like in the circle up there. Now, does this mean that we'll automatically crash? It doesn't give us timing. All it says when you see this is don't be there. This is where the shellacking can occur. This is where the butt-kicking 90% declines can occur in the account. So what do? I just don't buy crap there. You know where I go? I go where there's undervaluation. I go buy that. But then some people will say, Andy, you're going to underperform because as these valuations get up there, you're probably going to be in some gigantic blow-off bubble move. That is correct. I don't participate in things that are overvalued like that. So I'm just not there. It's that simple, guys. Now, if somebody says, Andy, you might underperform some of the companies that are over there, that's fine. I'll underperform them. And we're not underperforming this year. Don't get me wrong. We are way up. I think the majority of people on the website, their year-to-date gains are somewhere between like 30% and 100%, depending on how you weighted the portfolio and which companies you overweighted and underweighted. But I'll say this. You as an investor and myself, me as an investor, I don't have to be in things that outperform. Because if I don't like it or I don't understand it or it's overpriced, I don't have to be there. I don't have to make my money like other people make their money. I don't have to be the best performing investor if it requires me to take on too much risk. So you know what? I'm going to go grab my stocks that are undervalued. I'm going to wait for the money flows to come into that sector, and I will make my money that way. I don't have to make it someone else's way. And if I underperform someone else for a year, it doesn't matter because I don't want to take on the risk. Goldman, oil prices are down 45% from their 2022 peak, and we expect Brent WTI to decline further and average mid-low 50s in 2026. That's what Goldman Sachs is coming out with. And this is that first fractal move, the wave one to wave two move here. And they're circling December 2001, which is demand recession. Have we bottomed for the demand recession? Maybe we haven't yet. Maybe it does bottom in 2026. But what about Canadian crude that I showed that was squeezing into a corner? Ah, yeah, conflicting data perhaps. Maybe it chops sideways to 2026. Maybe it doesn't. What does someone do? What if someone disagrees with my opinion? Who do I go and what would the final decision be? Who do I go to make this final decision? What I've learned over the years is that you're going to have to make your own decisions. You can't listen to people like Goldman Sachs necessarily. You can take their opinions into consideration. It doesn't mean they're right. A lot of the companies have already broken out. A lot of the companies are already outperforming Canadian crude. Do you know when they outperform in? You know what market condition they outperform in? In a bull market. You know what we're in? We're in a bull market. We're in a bull market like 1998 to 2008, but we're right where the green circle is. That's where we're located here. So if I see that, I have to go with the data. Stay long. We're in a bull market. Coming down, Dow Gold equals 1 and platinum to silver ratio, hard to fathom, but platinum may outperform silver, and silver could do a 5 or 10x. That's completely true, and a lot of people are going to start to take notice to this. I've already positioned in platinum quite heavily and in silver. I think both metals are incredibly well positioned. Now, what gets people messed up is that they want to put all their money into one idea. And they want that idea to outperform everything else. So concentration, that's what it's called, can outperform. But it doesn't mean that you have to do that. You don't have to outperform everyone else. And I think that's where they get messed up. It's like they want to outperform everybody. They want the best possible return. And I understand that. That makes sense. But from a risk perspective and from a potential downside perspective, and the frustration that someone can have if it underperforms, that's where I look at it and it's like it's not worth putting all the eggs in one basket. Spread it across and do it in a way that gets you where you want to go in life. And that's what counts. You want to, if I were to sum up the way that I'm doing it, I want to take the least amount of risk to get where I want to go in life. And what people do is they want to just load up and they want to buy stupid crap with it, I'm sure. And they want to get really, really rich. And they put all their money and they take on all this risk. And it doesn't pan out the way that they want it to. Why did it not pan out the way they wanted to? They probably didn't do enough research, perhaps. Maybe they're not patient enough. Maybe they put too much into one sector and they couldn't handle the volatility. There's a lot of reasons why. If you spread it across 7 or 8 different sectors, some of that volatility may subside. You may reduce volatility in the overall portfolio, even though you're in a lot of volatile sectors. They offset each other to some degree, which is good. It helps with the mental aspect of the game, the emotional aspect. But yes, platinum versus silver, we could see an absolute killer in platinum. Totally agree. Garrett Goggins says gold is going much, much higher. No one is on board yet. Everyone believes gold is too high. We're experiencing the great reset of the global fiat system driven by gold-backed crypto. People have been conditioned by the last 50 years of prices. It's different this time, in his opinion. Yeah, the breaking of the interest rates is what gets me excited because money's going to flow differently. than the last 50 years. It's different than the last 50 years. It's the same as 1940 to 1980 in that area. Ronnie says the big long. I just had to say that. I had to put this up there just to say the big long. Performance golds, who to come moment. I had to say the big long. I love it. VLCC spot rate index is up 5%, up 6% to 87,600 per day. That's good for takers. Jordan says a quiet breakout is going unnoticed. Silver broke out from a 4-year long base against the S&P 500 last week in weekly terms. Silver against the 60-40 portfolio, which is a certain market condition, guys, pushing towards resistance from an 11-year long base. Here we go. We're about to break this one very soon. What does that mean? Why does this matter? Right? Because silver outperforms financial assets. The 60-40 portfolio is a representation of financial assets. And it outperforms during a certain market condition. So when we see this outperform, it's giving us confidence that we are in the market condition that we thought was coming. That's why it's important. And when that market condition exists, we get paid. We get paid. And it's coming. We are coming right into it. And I buy before. I don't wait for a breakout. Why? Because market conditions don't just snap their fingers and change overnight. They are there and present for like a decade long plus, or way longer. Depends on the condition that can exist. Depends how bad our debt is. This one's a First Majestic, and we did take positions here towards the bottom in First Majestic on the website. AG running into resistance that I think will add to an explosiveness of the coming move higher. Correct. We've got some resistance coming through here. Both trend lines kind of merging together right where we're at. Yeah, I think we're going to see a big move. We have a mixture of our portfolio in large silver mining companies and junior mining companies. Some of the juniors have been an absolute fun ride, and I'd expect them to keep going. They look really good. Uselink, this is the silver priced in USD, and I think this is momentum. So the biggest daily momentum breakout for silver since 2010. Back then, silver doubled within 6 months. So we're just starting to break out momentum-wise on silver priced in dollars here, where we could see a very big move in silver in a short period of time. President Trump was right again about the Federal Reserve. They are too late. And because of the bad job numbers, they need to cut in June, Scott Bessent has said. Okay. It says, we expect 3 consecutive 25 basis point cuts in September, October, and December, followed by 2 more cuts next year to 3.25%. A 50 basis point cut is also possible at an upcoming meeting if the labor market deteriorates more quickly. That's their opinion. And this, when the rate cuts go down, sometimes if unemployment is worse than expected, that's where the other Goldman opinion is coming up on oil, where oil could go down a little bit under that type of market condition. Rate features AM update, dry bulk Capesize is up 2%, Panamax is flat. Tankers, VLCC up 1%, Suezmax is flat. Ed Dowd says, if things are great, why do we need to lower rates? So Scott Bessent says, Kristen, if things are so bad, why was the GDP 3.3%? Why is the stock market at a new high? Well, isn't he talking out of both sides of his mouth? How can he say this, but then up here say that President Trump was right again about the Federal Reserve? They're too late, and because of bad job numbers, they needed to cut in June. Well, if we have bad job numbers, how do we have a GDP that's 3.3%? What's going on here? What's going on here? This winter is going to be so fun. So this is EU natural gas inventories in percent of full, and we're at 79.6%. We're pretty low here. See how much lower we are than previous years? Germany at 75.13, Italy at 90, France at 90, Netherlands at 67.72, Austria at 82, and Spain at 86. This could get real interesting here if we get a cold winter. It could get real interesting. We could see a spike in natural gas prices. Oh, wait, you know how we're also positioned for this. Yes, we are. Love it. Mark, oh, and that's where we're going to end it there. So that's what we've got for today. So we'll end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special coupon code. And that's all I've got for today. So we'll catch you next time. This is Finding Value.